Good morning and welcome to Stock Market Today for Monday, June 3rd, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. I hope everybody had a great weekend, but let's get back into it. U.S. equities came under pressure on Friday and finished near the worst levels of the day. S&P 500 was lower for the fourth consecutive week. REITs and utilities finished higher on the day, while comm services and energy led to the downside. Treasuries moved higher, sending the yield on the 10-year to 2.13%. Dollar was down on the yen cross. Remember, yen tends to do well in risk-off types environments. Gold was up 1.4%, and WTI crude was down 5.5% on the day. Your leading groups, REITs and utilities, as I said, finished higher. Healthcare and materials outperformed. Underperformers, comm services, energy, and tech. As we get to the desk this morning, futures are under pressure, down 40 basis points, but off the worst levels of the morning. Asian markets were mostly weaker overnight. Japan and Australia were amongst the worst performers. European markets are lower as well. Treasuries are extending their rally. Yield on the 10-year now below 2.1%. Dollar is little change versus the yen. It's slightly weaker against the euro. Gold adding on, up 90 basis points, and WTI crude is up a little bit over 1%, but did finish down nearly 9% on the week last week. So let's dive in. S&P 500, 200-day moving average gives way. All right, we tested it on Wednesday and Thursday, gapped lower on Friday morning, and closed below the 200-day moving average, which is ever so slightly now beginning to turn lower. Support is near 2720 and then 2650, and those mark the 38% and 50% retracements, respectively, of this move from December to May. RSI is nearing oversold levels. We've been watching it closely. We've been talking about it for the past couple of weeks, saying, are we going to shift into bearish ranges? Should we not break back above the 50-60 mark, that would be a momentum confirmation to the downside. That would indicate that momentum has shifted to bearish ranges and is confirming the weakness in price. So something to be watching closely. Also want to watch Chaikin money flow closely. Continues to weaken, now back below the zero line ever so slightly. Remember, we ticked below it on Thursday morning, came back Friday morning, we were slightly above, and now after the sell-off on Friday, we are back to slightly below the zero line. But no matter where we are now on the back and forth above and below zero, Chaikin money flow has been weakening. So indicators are deteriorating as the market takes out support levels. We now need to start to think about the next support levels to the downside at 2720 and then 2650. Those are the key marks that you should be watching here for the S&P 500. Resistance to any rallies now near 2800 and then again at 2850. And what you'll notice is those are gaps in the S&P 500 chart. Your market in a minute. It's Monday, macro day here at Chaikin Analytics, where we look at themes and trends across different markets and asset classes, and risk off remains as the S&P 500 breaks the 200-day moving average. 10-year yield continues to move lower. It's a mid-safe haven buying. We've talked about that ad nauseum. That trend remains in place. We've been saying for months that the path of least resistance for the yield is lower, and that theme is largely playing out. Gold rallies from support to break from the recent consolidation. That's another sign of safe haven buying, and it's bucking the trend in commodities as the other commodities decline, with oil the big culprit there, especially as the dollar moves higher. Futures, as I said, do point to a lower open here today. Now, the power bars for the major indices, remember what the power bars tell us. They tell us how many stocks in each of these indices have bullish ratings in green, neutral ratings in yellow, or bearish ratings in red. And we can see for the Dow, it's skewed in favor of the bears, 4 bulls to 6 bears. S&P, same story. 79 bullish or very bullish stocks for 101 bearish or very bearish stocks. NASDAQ underperformed on the day. 14 bullish or very bullish stocks for 22 bearish or very bearish stocks. Small caps, you've heard me pound the table. Underweighting small caps. We prefer large caps for adding equity exposure. That theme also continues to play out. 282 bulls, 417 bears all of the major markets skewed to the bearish side. Bonds, nice rally, sending yields lower, as we said, and that rally has legs here this morning. So according to the Chaikin Power Bar, small cap stocks and large cap stocks have turned somewhat bearish. Major indexes are all bearish. Now, our stock of the day today, auto-generated, based on the power gauge rating, is Sonic Automotive. Ticker symbol is SAH. Closed at 1743 on Friday, down 3.7%. Now, the automotive part suppliers and auto-levered names were under pressure on Friday because of the tariff against Mexico. A lot of the auto industry sources their parts from factories in Mexico. So let's keep that in mind as we run through our analysis on this stock. Chaikin Power Gauge rating for Sonic is very bullish due to very attractive financial metrics, strong price volume activity, positive export activity, but the stock does have weak earnings performance. 20 factors within the model kick out a very bullish rating. We have a strong trend, but a weak industry group. One knock against. Let's start to take a look here now. Bullish stock outperforming the market is oversold, but I don't like the weak industry group and I don't like the weak money flow right now. I think you want to give this stock some time to kind of find its footing and stabilize, especially in light of the fluid / dynamic news flow about the tariffs, especially as it relates to Mexico. Now, you do have some support in the $15, $16 level should the pullback increase. I think you want to add SAH to a bullish watch list, but I don't want to catch this falling knife here just yet. I want to give the stock some time to stabilize above support, and then all else being equal, start to consider it on the long side of the portfolio. SAH goes on to a bullish watch list today, but I don't see a reason to really get involved on the long side just yet. Our sector tracker now, looking at the movement of the major sectors over the last 5 days, and all of the major sectors are lower over that time frame as the market has been under pressure. So the key is to find the areas of relative strength and relative weakness, and kind of, if you're looking for long ideas and you're building your watch list, start to favor the areas of the market that have shown relative strength. Start to de-emphasize the areas of the market that have shown relative weakness. Now, real estate, obviously a defensive play, also levered to the decline in rates, top of the list. It's an area that we've liked for relative performance, and it continues to hold up on a relative basis. Communications, some of the defensive names in there holding up, doing their job. Tech, nice to see tech near the top of the list. We want to see tech find its footing. It's been a casualty of the trade tensions thus far, so we want to see tech find its footing. It is the largest weight in the S&P 500. Materials group we continue to want to avoid. Commodities are likely to remain under pressure due to global growth concerns. We also have the dollar starting to move higher. We'll take a look at that a little bit later in the show. Discretionary needs to find its footing here. A lot of the discretionary stocks, especially around retail, have reported some disappointing earnings as a whole. That has pressured the group, and we're starting to hear some commentary out of the retailers about rising input costs and what that could mean for the consumer. Industrials, healthcare, and utilities are middle of the road. Wouldn't be surprised to see utilities start to find their footing, especially as rates continue to move lower. Financials, lower rates are a headwind for financials as a group, but in particular the banks. If we look within the financials and dig down and do a little bit further research, we can see that within that group, the insurance names have held up and done well. Staples at the bottom of the list. Again, consumer-levered names under pressure, even though the staples are traditionally viewed as defensive. Investors starting to factor in what rising costs could mean for margins. And energy, it's another group that we've been avoiding. You've heard me pound the table on the bearish side of energy for quite some time. And it's important to point out that the energy stocks could not find any relative strength as oil rallied from the December lows. And now as oil has started to move lower, energy stocks are coming under pressure. That is why relative strength is so important. Groups that are weak tend to remain weak, and groups that are strong tend to remain strong. Now, our industry in focus today, biotech services, over the past 6 months has underperformed the S&P 500 by nearly 3%. Power bar ratio, which measures future potential, is very weak. 48 bearish or very bearish stocks for 5 bullish or very bullish stocks. Earns it a rank of number 20 of 21 subsectors, and it's moved down 2 slots over the past week. Now, some of the indicative names there, Dicerna, D-R-N-A, BioCryst, BCRX, and Portola, PTLA, all have very bearish Chaikin power gauge ratings. But as always with the individual biotech names, you want to be aware of what they have coming down the pipeline as potential catalysts. So we're going to just take a look at the group here. XBI is the SPDR S&P Biotech ETF. It has a bearish Chaikin power gauge ETF rating. So our analysis is the same, really. Bearish fund, underperforming the market since mid-April. So market and model are in agreement. Dynamic Duo are in gear here to the bearish side. What's interesting as well is that the past two cycles for overbought, oversold have failed to produce an overbought reading by our indicator that tells us that this downtrend has momentum and the momentum to the downside is strong. Now, Chaikin money flow is bullish, but it's been waning over the past 4 to 6 months, and the fund is below the declining long-term trend line. Biotech as a group likely to remain under pressure. Obviously, there are idiosyncratic stories within the group that you need to be aware of if you're looking at the individual names. But as a whole, we want to continue to avoid that group. Friday's S&P gainers and losers. COO earnings sent that stock higher. Dish up on Sprint T-Mobile news. Dollar Tree's comps beat sent the stock higher. Newmont up with gold. No real news on ESS. Gap's earnings sent the stock down by 10%. SYY, investors didn't like what they heard at a conference, sent that stock down by 7.5%. Mattel, no real news. Mexico news on the tariffs. The culprit on the bottom two names here, APTV as well as STZ, sending both of those stocks lower on the day. Small caps continue to underperform. Here's that IWM relative to the SPY. We can see a clear downtrend. Tried to find support, but is now broken below. Remains below the declining 200-day moving average. So the trend is down and support has now broken. That trend is confirmed by bearish momentum. RSI of the ratio has shifted into bearish ranges. Now, not quite oversold, so that is a slight positive here, but for all intents and purposes, the trend remains down. It is confirmed by momentum, and on an absolute basis, we can see that the IWM failed to break through resistance and has now been rebuffed and is trading lower. We've been pounding the table on small caps. We've been saying small caps continue to underperform, and that underperformance is likely to continue, and that does remain the case. We'll look for signs of stabilization, but they are not there yet. But we're really going to need to see this trend reverse and start to move higher for us to really become, in any way, shape, or form, excited about small caps on a relative basis. Downtrend confirmed by momentum. 10-year yield remains under pressure. We've been table pounding on this one, saying that the path of least resistance is likely lower, and that has played out. Below the 50-day moving average, below the 200-day moving average. Broke support at 2.35, now targets support at 2.1, and is trading below it here this morning. I think you have to start thinking about the potential for the 10-year to test 2%. Conviction in that analysis is strengthened by the fact that the RSI of the yield remains firmly in bearish ranges. Look at how easily it's been able to become oversold, never comes close to becoming overbought, i.e. RSI above 70, hardly ever gets above 60 during rally attempts. So momentum confirms the path lower for yields. Continue to think that the path of least resistance for yields is lower. Can we see a little bit of a counter trend rally given the oversold conditions? Of course we can. But below the trend lines with bearish momentum increases the odds that we are going to test the 2% level on the 10-year yield. Something to keep in mind as you're looking through ideas. You probably want to favor names that do well when yields decline. Gold rallies on haven buying. You can see nice breakout here through this downtrend line. Notice the RSI for GLD, the SPDR Gold Shares ETF, never became oversold. So the exact opposite of what we were seeing with TNX, right? Never threatens the oversold conditions and now moving higher. Momentum shifting into bullish ranges with this breakout. Chaikin money flow turns bullish for GLD. GLD seeing some safe haven buying, likely continues to the upside. As we said, gold was higher here this morning. Other commodities fall as the dollar breaks out. Here's the Bloomberg Commodity Index moving lower below the 200-day moving average. Again, RSI is in bearish ranges. Notice rally attempts of late have not been able to penetrate the 50 mark, and that's all while the dollar breaks out and now holds above the breakout level, which should continue to act as support. So that is going to wrap it up for today. Head over to chaikinanalytics.com/today. Sign up for that free email. You can follow along with this show. Get daily stock ideas in your inbox every trading day for you to consider. I'll be back tomorrow. Have a great day.